If the house always wins, shouldn't you just buy the house? Of course, that's not how it works. Welcome to the third episode of our CasinoLove series, where we take a factual look at publicly traded companies in the iGaming space. This is not a financial advice. We are not telling you what to buy, what to sell, or what to avoid. Our goal is simply to look at the company, understand what it does, and go through the latest official information. Today, we are looking at Flutter Entertainment. So first, what is Flutter? If the parent company name does not sound familiar, the brands probably do. Flutter says it is the world's #1 sports betting and iGaming operator. The business is built around two large divisions, FanDuel in the United States and Flutter International for the rest of the world. Its portfolio includes brands such as FanDuel, PokerStars, Paddy Power, Betfair, Sky Betting and Gaming, Sportsbet, Sizzle, Snay, Tombola, Edgerabat, MaxBet, and BetNational. And this is the key point for viewers. Flutter is not mainly the company quietly supplying software in the background. It owns the customer-facing brands. It runs Sportsbook, online casino, poker, lottery, exchange betting, daily fantasy sports, horse racing wagering, and prediction markets in the US. According to its 2025 Form 10K, 53% of revenue came from Sportsbook, 44% came from iGaming, and 3% came from other products. The company also said 88% of group revenue came from online operations. FanDuel Sportsbook was live in 25 states or territories at year-end 2025, while FanDuel Online Casino was live in 5 states and the international segment operated in about 100 markets. Now, let's move to the latest official numbers. Flutter released its fourth quarter and full year 2025 results on February 26, 2026. For the fourth quarter of 2025, revenue was $4.737 billion, up 25% year-over-year. Adjusted EBITDA was $832 million, up 27%. Net income was $10 million. For the full year 2025, revenue was $16.383 billion, up 17%. Adjusted EBITDA was $2.845 billion, up 21%. Average monthly players reached 15.911 million, up 14% year-over-year. So, at high level, Flutter reported a bigger business, more players, and higher adjusted earnings. This is the part where we want to stay very close to management's own explanation. According to Flutter, the fourth quarter growth was primarily driven by acquisitions and more favorable US sports results compared with the same quarter a year earlier. In the US, revenue grew 33%, with Sportsbook up 35% and iGaming up 33%. Flutter also said FanDuel had 41% Sportsbook gross gaming revenue share and 28% iGaming gross gaming revenue share in the fourth quarter. In international, revenue grew 19%, with Sportsbook up 6% and iGaming up 31%. The company said that performance included the benefit of M&A, partly offset by the India market exit and customer-friendly sports results. Organic Sportsbook revenue was down 11% because of an adverse swing in sports results, while organic iGaming revenue was up 9%, driven by strong performances in Southern Europe and Africa and Central and Eastern Europe. So the company's own message is fairly clear. Acquisitions helped, the US remained the main engine, and iGaming continued to be a strong growth area. Now, here is an important point. Even though revenue and adjusted EBITDA moved higher, Flutter still reported a full-year net loss of $407 million. The company said the main reason was a $556 million non-cash impairment charge triggered by regulatory changes in India. In its 10K, Flutter said Jungle ceased real money gaming in India in August 22, 2025 after the ban of all forms of online real money gaming went into effect there. So this is one of those cases where the top line and the operating picture can look strong, while the reported bottom line still turns negative because of a major non-cash charge. A few more official points help round out the picture. Flutter said leverage ended 2025 at 3.7 times, reflecting acquisitions in the US, Italy, and Brazil. The company also said it returned $1 billion of capital to shareholders during 2025. Looking ahead, Flutter introduced 2026 midpoint guidance of $18.4 billion in revenue and $2.97 billion in adjusted EBITDA. For the US, management guided to $7.8 billion of revenue and $1.05 billion of adjusted EBITDA. For international, management guided to $10.6 billion of revenue and $2.23 billion of adjusted EBITDA. Flutter also said that guidance includes further investment in prediction markets through FanDuel Predicts, plus investment in Brazil to grow market position. Again, this is not us forecasting anything. This is simply the company's own published outlook. Now, let's put the stock chart on screen. At the time of our track on March 19, 2026, Flutter was trading at about $106.50 on the New York Stock Exchange. Again, we are not showing it to make a buy call or a sell call. It is simply part of the factual picture. This is a public company and the market is pricing it every day. So, what is the clean takeaway for episode 3? Flutter is one of the biggest direct-to-consumer companies in global iGaming. For players, it is the company behind brands they may already know or already use. For traders and investors, the latest official picture is a very large multi-brand operator with strong revenue growth, a major US engine through FanDuel, a broad international footprint, and a reported full-year loss that the company says was driven mainly by a large non-cash impairment tied to India. This was Flutter. Not a recommendation, not a financial advice. Just the company, the products, and the latest official facts. If you want us to continue this series, tell us which publicly traded iGaming company we should cover next in the comments below.